What if the oldest asset on Earth suddenly outshined every modern investment that you own? With stocks down, bonds shaky, and even Bitcoin becoming more volatile than usual, gold has surged over 30% and smashed through records in 2025. Now, if you're wondering why it has outperformed and if you should invest in it, stick around as I'll break down why gold is back in the spotlight and what it could mean for your portfolio in the future. If you've checked your news feed lately, you've probably seen headlines about gold that's literally just smashing record after record.
You could call it a modern-day gold rush, with gold prices this month reaching all-time highs.
And that's not just hype. Gold really is on a tear right now. So as of April 2025, gold prices have shot up to an all-time high of $3,500 per ounce, which is wild considering it was around $2,600 per ounce just a few months ago at the end of 2024. Now, that's a jump of over 31% in less than 6 months, which is a huge move for something that's usually seen as kind of one of those slow and steady kind of investments.
That's right. In fact, that's the fastest 6-month surge in gold prices since the 1970s. It's not just beating stocks, but even most cryptocurrencies during the same period.
Thanks, Yara. I didn't know that. But now, if you're thinking,
what does it have to do with me?
Let's put it in real terms. So imagine you picked up an ounce of gold back in January for $2,650. Fast forward to today and you could sell that same ounce for $3,500. That's an $850 gain just for holding on to something that you can literally stash in a sock drawer. And not many investments are pulling off those kinds of returns, especially right now with, the stock market bouncing all over the place. But here's something even crazier. Gold isn't just hitting new highs in dollars. It's also breaking its all-time inflation-adjusted record from 1980. And that's a big deal because it means that this isn't just about price. It's about what gold represents when people start to, kind of worry about the future. So why is everyone suddenly flocking to gold? Well, there is a reason that gold gets all the attention when the world feels uncertain. And it has everything to do with its reputation as what they call a safe haven. But there's more to the story than just fear. So let's dig into why gold is the go-to move for many people when things get shaky. So why is it that whenever the world feels like it's spinning out of control, people start talking about gold? Well, let's break that down. So when stocks are crashing, inflation is running hot, or politics, they get messy, investors start looking for somewhere to park their money that feels safe. And gold has been that go-to for literally centuries. But here's what makes this year different. The usual safe options, they're not looking so safe anymore. So US Treasuries, for instance, which are basically IOUs from the government and have always been considered a rock-solid alternative investment, have been bouncing around thanks to all the political drama and worries about the US government debt. Heck, even Bitcoin, which some people call digital gold, right? That has been just as unpredictable as the stock market.
It's interesting. While Bitcoin is called digital gold, its volatility lately has been more like a roller coaster. In fact, over the same period, Bitcoin has swung by as much as 40% up and down.
Exactly. And while we all know that Bitcoin can be volatile, that's pretty crazy. That said, why does gold keep winning? Well, for starters, it's a physical asset, something that you can actually hold in your hand. It doesn't rely on a government or a company to keep its value, and it's recognized pretty much everywhere on the planet. Second, gold's reputation is built on surviving everything from recessions to wars to wild inflation. So when the world gets shaky, gold's value tends to hold up or even go higher because people really trust it to keep their wealth safe. The reason why? Well, it's always been that way. It's really as simple as that. Nearly every place in the world has agreed that gold has immense value. So the key takeaway? Gold is shining as the ultimate safe haven in 2025, not just because of tradition and history, but because the alternatives are looking shakier than ever. When everything else feels risky, gold is the one asset that people trust to weather the storm above all else. But here's a twist. There's more to this story than just fear and uncertainty. So what's actually pushing gold to these new insane highs? Is it just panic, or are there deeper forces at work? Well, in this next section here, we'll dig into the real drivers behind gold's record-breaking run. And before we move on, I have to say it, if you want to see exactly how you can take advantage of these trends and all the different ways to invest in gold, beyond just, buying jewelry or gold bars, make sure you subscribe because my next video that I'm going to publish is 100% dedicated to walking you through all the options to buy gold step by step. So moving on, let's dig into the real drivers behind gold's record-breaking run here. So let's start with the elephant in the room, global drama. The world has been on edge lately, and every time there's a new headline about trade wars or tariffs or political shakeups, gold just keeps climbing. So for example, in early April 2025, President Trump dropped a 25% tariff on imported vehicles, and China fired back with their own tariffs up 34% on US goods. That kind of back and forth has investors very worried about a global recession. So they're rushing to gold for safety. But politics isn't the only thing that's stirring the pot. So central banks are making some big moves too. So after the US and its allies froze Russian central bank assets due to the Ukraine war in 2022, a lot of countries realized that their dollar reserves might not be the best place to keep their wealth. So they've been loading up on gold instead. Now, China's central bank, for example, has been on an absolute buying spree for 5 straight months, and Goldman Sachs now estimates central banks are buying around 70 tons of gold per month, way up from the old average of about 50 tons. The World Gold Council reported that in the last quarter of 2024, central bank purchases jumped by 54% year over year to 333 tons, which is massive. Those aren't just small countries either. Big players like, China, Russia, and India, they're all in on gold, trying to reduce their reliance on the US dollar.
To add to that, central banks now own over 20% of the world's above-ground gold reserves, which is the highest proportion in decades.
And yeah, that's a pretty crazy stat. And then there's inflation, right? It's been running hot with global rates in the, I'd say 6 to 8% range for major economies. And when the cost of living keeps rising and the dollar loses value, gold becomes the go-to move for anyone trying to protect their wealth. So the price of gold, it tends to move hand in hand with inflation expectations. And right now, those expectations, they're sky high. That's why you're seeing not just individuals, but also institutions and even entire countries just piling into gold. So to put it all together, think of it like this. You've got global trade tensions, central banks on a gold buying binge, inflation that just won't quit, and a dollar that's losing steam. Each one of these would, be enough to push gold higher on their own, but together, that's really why we're seeing prices break records week after week. But what does this all mean for you, the regular investor, right? Is this a golden opportunity to buy, or is it just hype? Well, stick with me because next we're going to be breaking down exactly how these wild gold prices will impact your everyday investments and what you should watch out for if you're, kind of thinking about jumping in. All right, so if you're not a Wall Street pro or a central banker, what do these sky-high gold prices actually mean for you? It's easy to see the headlines and think, well, that's great for rich people and hedge funds, but does this really matter for my own money? Well, spoiler alert, it absolutely does, and maybe more than you think it does. So first off, gold's monster rally this year has totally outperformed most of the usual places that people park their money. While gold has soared over 31% since January, the S&P 500 is actually down 9% for the year. And bonds haven't exactly been a safe haven either. So if you're someone who's watched your 401k or your IRA take a hit, you're not alone. And you might be wondering if you missed the boat by not having more gold in the mix. Well, as great as that sounds, there's another side to this story. So with gold prices, they're kind of swinging, $50 or more in a single day. And there's just a ton of volatility right now, which is completely not normal, by the way, when it comes to gold. That means if you're thinking about jumping in, you need to be ready for a wild ride. It's not just the usual, buy gold and relax strategy here. The price could spike or drop depending on what's happening in the world. And that can really mess with your nerves if you're not used to those big swings.
Quick question for the humans regarding volatility. Do sudden gold price drops make you nervous? Or do you see them as opportunities?
That's actually a good question, Tiara. So let us know in the comments, as I'm curious too about that. But, and this is a big but, chasing gold just because it's hot can really backfire. So history is full of folks who, bought in at the top of gold only to panic and sell when things cooled off. In fact, most financial planners usually recommend keeping gold to a small slice of your portfolio, like 3% or so, just to help smooth out the bumps without putting, too much risk into play. So what's the real takeaway here? Well, gold's rally is a wake-up call that even the usual safe stuff isn't always safe, and that having a mix of assets, including a little bit of gold, can help protect you when the economy gets weird. Now, if you're curious whether gold actually deserves a spot in your portfolio, or if it's just kind of a flashy distraction right now, stick around, because up next, we'll break down the pros and cons of investing in gold right now and show you exactly how to decide if it's the right move for your money. Okay, so if you're sitting here and you're thinking, okay, gold is hot right now, but should I actually invest in it? Well, you're obviously not alone. Heck, I've been doing that myself lately. The answer isn't a simple yes or no. It really depends on your financial goals and how you want to balance your investments. So let's break it down. Gold can be obviously a great addition to a portfolio for a few different reasons. So first, it's great to diversify, meaning that it tends to move independently of stocks and bonds. When the rest of your investments are tanking, gold can help really smooth out those bumps. Plus, it's a good hedge against inflation and currency devaluation. Now, if you're worried about the dollar losing value or prices rising too fast, gold can really help protect your purchasing power. But here's the flip side. Gold doesn't pay dividends or interest like stocks or bonds do. It's purely a store of value, so you're really betting that its price will rise over time. That's really the only way that you make money. Plus, at times, gold can be super volatile. If you buy in at the wrong time, you could end up selling low and losing money. So here's a real-life example to think about. Imagine you've got a $10,000 investment portfolio, and you decide that you're going to put 5% of that into gold. That's $500 worth of gold. Now, if gold prices rise by 20% over the next year, your $500 investment becomes $600, which is a nice gain. But if you had put that same $500 into a high yield savings account or a solid index fund, you might have earned similar returns without any of the risk. All right, so should you invest in gold? Well, it's not a bad idea if you're looking to diversify and protect against inflation or market downturns. Just remember to keep it as a small part of your portfolio. And don't buy in just because everyone else is. Make sure it aligns with your long-term goals. That's crucial here. But what if you're not really sure how to get started, right? Buying gold can seem intimidating, especially if you're new to investing. I can't imagine buying a big gold bar, right? But don't you worry, my next video is going to cover every single way to invest in gold, and it goes far beyond running to Costco to buy one of those gold bars you may have heard so much about. Now, I'll be publishing that one in a few days here, so subscribe to make sure that you see it when I release it. But I have to say, if you're really thinking about adding gold to the mix, here's a big takeaway. It's not a magic bullet, but it could be a smart move if you do it right. Just keep your expectations realistic and your strategy clear. And remember, investing is always about balance. Don't put all your eggs in one basket, even if that basket is made of gold. Now, if you're one of those people that loves Bitcoin and thinks, oh, gold's no good, or vice versa, right? Just do me a favor. Check out this video right here. You're gonna absolutely love it, and it does a great comparison.